Welcome to Forkast IQ. As the world accelerates into the digital economy, we're going to help you stay ahead with the latest in Web3, crypto, and data. This is where we look beyond just the headlines to get you the insights and knowledge that will help power smarter decisions. I'm Forkast Megha Chaddah. Well, let's kick it off with a big development for Ripple, the company closely linked with cryptocurrency XRP. On Thursday, Ripple Labs' Singapore subsidiary, Ripple Markets APAC, announced it received an in-principle approval for a major payments institution license from the Monetary Authority of Singapore, or MAS. The license will grant Ripple the permission to provide regulated digital payment token services and products in Singapore. In a statement, Ripple said the license also allows the company to expand customer usage of its on-demand liquidity service, or ODL. That's a service that leverages the XRP cryptocurrency to facilitate cross-border payments. Last year, much of Ripple's global ODL transactions flowed through Singapore, which serves as the company's Asia-Pacific headquarters. And speaking of Singapore, on Wednesday, the Monetary Authority of Singapore, or MAS, released a white paper for purpose-bound money, detailing a technical overview of digital currencies designed for specific purposes. In its white paper, MAS said purpose-bound money is designed to run on a common protocol that works on blockchain and non-blockchain ledger systems. Digital monies can come in various forms such as central bank digital currencies, tokenized bank liabilities, or stablecoins. The white paper was developed in collaboration with International Monetary Fund, Amazon, DBS Bank, and other industry players. Meanwhile, as central banks worldwide develop their own central bank digital currencies, or CBDCs, International Monetary Fund's Managing Director Kristalina Georgieva says there should be a common platform and rules to ensure global use of CBDCs. In a Reuters report, Georgieva said without such platform and regulations, a vacuum will be created and likely filled by cryptocurrencies. She also added CBDCs should be backed by real assets. The IMF previously discussed the idea of a global platform in its quarterly publication in September last year. From CBDCs, now let's talk about cryptocurrencies. On Tuesday, a new cryptocurrency exchange called EDX Markets was launched in New Jersey, US. It's backed by traditional Wall Street players like Fidelity Investments, Citadel Securities, and Charles Schwab. EDX will offer Bitcoin, Bitcoin Cash, Ethereum, and Litecoin for trading. Interestingly, these four cryptocurrencies were among those not named as securities by the US Securities and Exchange Commission in the recent spate of lawsuits against crypto exchanges. In a report, EDX said it adopts non-custodial model designed to mitigate conflicts of interest. In plain speak, that means the custody of customers' digital assets will not lie with the exchange. Instead, it operates similar to traditional stock markets where brokerage firms book orders from investors. In other news, Terraform Labs founder and CEO Do Kwon now face jail time. On Monday, a Montenegro district court sentenced Kwon to 4 months in jail for forging travel documents. Kwon was arrested at the Podgorica airport on March 23rd for allegedly attempting to fly out of the country using fake passports along with Terra executive Han Chang-jun. Kwon is wanted in the US and South Korea, where prosecutors accuse him of fraud, securities law violations, and several other charges related to the collapse. Well, let's take a look then also at the crypto market action this week, and some of the biggest names from traditional finance, including BlackRock, Invesco, and Deutsche Bank, announced their moves into digital assets, upping risk appetite among investors. This pushed Bitcoin above the $30,000 mark on Thursday for the first time in 2 months. BTC has added 20% in the last week alone, trading a little above 30,000 mark early morning in Asia on Friday. And XRP, well, that one also saw some big moves, jumping over 5% on Thursday, and it's now trading at almost 50 cents. Well, let's get in Benjamin Stani from Matrix Sport to talk about all the market action. Benjamin, it's always a pleasure speaking to you. Well, let's start off with some of the big news that we've seen in Bitcoin. There's been such a spate of interest in Bitcoin spot ETFs within the institutional investors. We saw BlackRock filing for a spot ETF, even as retail investors seem to be on the sidelines. What do you make of all of this increased activity?
The timing of BlackRock, the largest money manager globally, filing for a spot ETF weeks after the SEC, the largest regulator in the US, going after two of the major crypto exchanges. And so that has sparked a bit of excitement and is probably also a driver of price action as of recent. And to your point, there's been a lot of companies that sort of jumped on that bandwagon. Just to name a few, Wisdom Tree has filed for an ETF. Invesco has revisited their application and refiled again. And so there is at least some hope that this environment might be a different one, and there's actually a chance. Now, if things would go through, our view is that the earliest that any spot ETF could probably come around is by the end of 3Q, early 4Q. So there's still, even if everything's smooth, there's still a bit of time before that institutional money hit the market. And so at the moment, the price movement, the action that you see is mostly people speculating.
Ben, Bitcoin's market dominance has reached 50% for the first time in 2 years, despite a rough couple of months. Bitcoin is the only cryptocurrency that SEC Chair Gary Gensler labeled a commodity, while a whole bunch of other cryptocurrencies were called securities. Now, could this be a major reason why Bitcoin's been able to, take such a lion's share of the entire market cap?
Most people would say that we're currently in a bear market. And so it's very natural to see Bitcoin dominance go up in a bear market as excitement and hot money leaves the industry. And so seeing Bitcoin dominance levels above 50% is something that is happening very naturally in the kind of market environment that we're in. And it's probably been aggregated by the fact that the SEC has labeled a number of altcoins as securities in the recent filings against the two aforementioned exchanges. And so that has had an intended or unintended chilling effect. For example, fintech players like Robinhood or eToro, they've announced that they're going to delist some of these tokens that have been classified as securities because they just don't want to be caught in the crosshairs. Overall, though, we've seen Bitcoin dominance creeping up since end of last year, basically since the FTX.
And Ben, where do you see the markets headed, especially with increased interest in the Bitcoin ETFs? Anything particular that you think could be a potential market move over the next week or in the slightly longer term?
The ongoing cases with Binance and Coinbase, particularly on Coinbase, I think one revelation was that the court had ordered the SEC to respond to their petition of lawmaking, and then the answer was something a bit of a whiny, we will have enough time. Precedents have given us, in the past we had 10 years for lawmaking. And so Coinbase is pressing on that to get a more defined answer, which we should, I expect, be getting another response over the next few weeks. I guess the one that has been mentioned many times, but I think will be relevant from now all the way until 4Q is the Mt. Gox unlocks. So Mt. Gox, to remind everybody, is that exchange that got hacked and in 2 cycles ago, and there had been BTC recovered that has been in talks of being distributed. These distribution filings have now been done by the claimants, and so between now and what I believe is the end of October, we should see about 140,000 BTC and corresponding BCH, because the hack had been before the hard fork, will be issued to these claimants. And so there's potential some selling pressure of those in the market, but we don't know the exact timeline of that.
Ben, thank you so much for joining us today. Well, with that, we'll take a quick break on the show and check in on the NFT markets when we return.
Forkast.News is your gateway to all things blockchain, breaking down and breaking through the noise with the people who know it best and why it matters. We go to where the action is, from Asia to the world. Forkast is the most reliable source of intellectual discourse and insight that informs, educates, and bridges the gap between the blockchain industry and the mainstream. The future is being built, and Forkast has it covered. This is Forkast.News.
Thanks for staying on with Forkast IQ. And it seems Bitcoin isn't just winning in the cryptocurrency arena, but also in NFTs or non-fungible tokens. On Thursday, Bitcoin's 24-hour NFT sales rose for a fourth consecutive day, up a little less than 200% to $9.78 million. Now, sales for uncategorized ordinals also increased to $7.36 million. Forkast Labs data analyst Yehudah joins in then to talk about the big moves in the NFT markets. Yehudah, take it away.
Well, good morning. It's great to see you. Let's get into the NFT market, where we have a bit of a familiar story taking place. Forkast 500 NFT index is down again this week, but it's declining at a slower rate and actually showing some signs of life. The daily index is occasionally showing green in certain 24-hour periods. News from all corners of the blockchain, whether directly impacting NFTs or not, has clearly had an impact on the index, and at the very least has stemmed the bleeding of the market. We'll kick it off with my favorite topic, that's art. Digital artists are flourishing by utilizing the blockchain, some to preserve their art on-chain and others to use it as a tool in their creative process. Often with generative art, that's exactly how it's being used. Highlighting how significant this art renaissance has become was Sotheby's auction of 37 historic artworks. Most of them were minted on Ethereum's Art Blocks platform over the last few years. In total, $10.5 million in sales was brought in at the strike of the gavel, with the grail of the collection being Ringer's number 879. It's referred to as the Goose for obvious reasons. The Goose sold for $5.4 million, and after fees, it came in at $6.2 million, making it the second highest priced generative artwork ever sold. That's second only to a piece from the same collection. It's Ringer's number 109, which in 2021 sold for $7.1 million. The entire Sotheby's lot, which was comprised of Fidenzas, Chromie Squiggles, Ringers, and CryptoPunks, to name just a few, previously belonged to the now defunct Three Arrows Capital Fund. As of last week, the Goose now belongs to 6529's Capital Fund. Bored Ape Yacht Club's floor prices have struggled tremendously in the past week, with falling prices and buyers drying up. Average sale prices in June have fallen from as high as an average of $95,000 earlier in the month to as low as averaging just $67,000 more recently. May and June saw Bored Ape's monthly average sale price fall to lows not seen since July 2021. On the other hand, DeGods and Opepin and Checks, those are a few projects that are doing rather well in this market, each seeing their floor price climb double-digit percentages in the last 7 days. Earlier this year, developers on Bitcoin were inspired by Ethereum's NFTs and created their own spin on blockchain collectibles with Bitcoin's ordinals. 5 months and over 12 million ordinals later, devs on Ethereum are feeling inspired by those ordinals, and they've created a new collectible on Ethereum called ETHscriptions. ETHscriptions allow images, files, or text under 96 kilobytes to be stored on-chain using almost any type of Ethereum transaction. Already, a 10K collection called Ethereum Punks has been minted as ETHscriptions, and in just a few days, they've traded for over 260 ETH on secondary. So what can ETHscriptions be used for? Well, right now, simply storing images on the blockchain, it's the main use case. It's also one of those type of innovations that may pay off down the road. You can see that sometimes potential isn't realized until a much, much later date.
Yehudah, thanks so much for that analysis. On that note, we'll take a quick break and talk about crypto developments in the UAE on the other side. Don't go anywhere.
Forkast.News is your gateway to all things blockchain, breaking down and breaking through the noise with the people who know it best and why it matters. The future is being built, and Forkast has it covered. This is Forkast.News.
Welcome back to Forkast IQ. Now, rolling sand dunes and glitzy skyscrapers all come together in the United Arab Emirates. The UAE, with a tenth of the world's oil reserves, has long been a leading financial hub in the Middle East. But now it's looking beyond traditional businesses to the digital economy. Forkast Megha Shah has more.
7 cities merge to form the United Arab Emirates, or UAE. with Dubai and Abu Dhabi the well-known ones. Over the past year, several crypto and blockchain companies, including Binance, OKX, and Huobi, have found a warm welcome in the region. UAE's crypto revenue is projected to hit $240 million this year. As the US tightens regulatory screws on the sector, more crypto exchanges, including Coinbase, are eyeing the UAE as a viable option to set up shop.
UAE is on a very high vibe in terms of cryptocurrency and the blockchain.
The UAE is stepping up its game in the race to central bank digital currencies or CBDCs. The first phase of its CBDC, known as the digital dirham, is expected to be completed by middle of 2024. How will the digital dirham work out for the common man?
Instead of having a credit card, you're going to have a wallet which has a digital dirham, and it is risk-free because it's backed up by the central bank. I think the digital dirham will solve most domestic payments. You name it: supermarket, school, restaurants, anything in the mall.
Dubai, a city that ranks 17th in the Global Financial Centers Index, has positioned itself as a leading digital assets hub with plenty to offer to crypto investors. Low taxes, access to capital, ease of doing business, and free zones are some factors that attract Web3 and crypto companies to the city.
Dubai has this right mix of different elements which helps us attract the kind of talent pool into the region over here. We've got DMCC, there is DIFC that fosters a lot of this innovation, AGM, of course, One Central as well. There are these free zones over here that help in, with the ease of setting up businesses over here as well.
The collapse of Silvergate and Silicon Valley Bank earlier this year has impacted access to banking services for crypto firms. But it seems those looking to set up blockchain businesses in Dubai have it relatively easy.
It's incredibly impressive how fast you land in Dubai and you set up a bank account, you get the licenses, you get the office space. It truly attracts the entrepreneurial spirit.
In line with its ambitions to be a global metaverse hub, Dubai's strategy is to create 40,000 virtual jobs and add $4 billion to the city's economy in 5 years. The city's growing digital assets arena is overseen by Virtual Assets Regulatory Authority, or VARA. In February this year, VARA published a final framework of rules for digital asset companies that allow them to be licensed. Many crypto exchanges, including Crypto.com and MaskX, received preliminary approvals to expand and set up virtual asset businesses in the city. And while Dubai is known for its bling, one cannot ignore its quieter but richer neighbor, Abu Dhabi. Also UAE's capital and home to 96% of the country's oil reserves. Abu Dhabi Global Market, or ADGM, Financial Free Zone, has been home to blockchain and crypto innovation since 2018. There's also Hub 71, a tech ecosystem that allocated $2 billion earlier this year to back Web3 and blockchain startups in the region.
Well, in Dubai, they have one focus, and with Abu Dhabi, they have a different focus. And I think they are learning from each other. So both they have the same concept of of promoting digital cryptocurrency and virtual assets and protecting the investor.
The FTX collapse of last year has led to tighter regulatory scrutiny as the country cracks down on dozens of unlicensed crypto exchanges. Authorities reprimanded the co-founders of failed Three Arrows Capital for operating and promoting their digital asset exchange, OP&X, without a license. Binance was also asked to provide more information on ownership, governance, and auditing. But there are those who believe that there's only so much regulators can do.
We cannot make the regulatory authorities in charge of closing the loops and the gaps and making everything ideal and perfect. This is not happening anywhere in this whole earth. So policymakers or regulatory authorities, they are trying to make it safer, better, to furnish the way for the technology and business in a very well-organized way. Still, if people if they want to breach the law, they can do it.
The UAE stands out as a strong competitor for a digital assets hub. But to win the race, striking a balance between robust regulations and innovation will be key. Megha, Forkast.
The UAE is buzzing with crypto and blockchain developments. Why is it so attractive for digital assets firms? What is UAE getting right that others aren't? Let's find out from those who are in the thick of action there. Dominic Longman of Binance Abu Dhabi and Lennox Lai of OKX join us now. Great to see you both, gentlemen.
I'm all right, thanks.
Well, let me start off with you, Lennox. Congratulations are in order. Dubai's VARA has granted OKX a minimal viable product or MVP preparatory license. Can you tell us what this means for OKX? What you are now allowed to do as a crypto exchange?
We are basically allowed to start promoting a brand and allowed it to market our brand in the UAE region. And immediately starting for engaging with banking relationships and also starting investor educations. We are very confident that everything will happen within this year, getting very close. So the MVP license actually means that a lot of internal procedures, system, policy is already quite ready. And that is subject to approval for the full license only. I think so. That's why we are allowed to market our brand and starting our store in UAE.
Dominic, Binance acquired a virtual asset custody license in Abu Dhabi. Tell us about why Abu Dhabi.
So Abu Dhabi is the capital, the central bank's here. You have the free zone, as I say, and again, for a critical factor with the free zone with ADGM is that it's against English-based law, which makes it a very, very interesting proposition for international companies to come to. There is more of I suppose, the crypto Web3 scene going on in Dubai. That doesn't mean it isn't happening here. We've got great players like Hump71, which we work with. We were here for a year now. I think now that visibility, adding with say the Coinbase, is everyone else who's now coming through and really looking at the UAE as a place to now call home for future crypto businesses.
Well, my next question is for both of you. Crypto regulation is a big concern in the industry right now. What can you tell us about crypto regulation in the UAE specifically, Dominic?
We are in Abu Dhabi, and then just in the past few weeks, the SCA, so that's the larger federalized regulator, has come out with their own statement regarding virtual assets as well. So, from a regulatory standpoint, you've got a huge amount of activity over the past number of years. There has always been a really strong focus in crypto and a crypto community way back from say 2016 onwards. But yeah, it's accelerating because you've got government support. You've got a huge amount of focus in the region just because it is a growth region, and also you've now got talent that's coming through and actually landing and staying here. So you've got a real sort of ecosystem growing.
And Lennox, what are your thoughts on the regulatory wins that we are seeing in the UAE?
I think the other jurisdiction has a lot to learn from Dubai, and because for the very simple reason, they start from a very good direction and fundamentals already. I would say you create a separate regime just for licensing virtual assets. That's sufficiently important because a lot of jurisdictions trying to attempt to regulate cryptocurrency as maybe commodities or maybe security, or maybe or replicate similar regime in the traditional asset are trying to put it and force it in the virtual asset. That might not necessarily correct, because there are lots of hidden details that while we operating an OTC desk or cryptocurrency exchange is quite different. It's quite different. So in that context, I think it's better to, hey, let's start from a brand new regime, tailor-made for this industry.
And Dominic, have you felt that tightening of regulatory scrutiny? Recently we've had a spate of lawsuits in the US from the SEC against crypto firms.
I'd actually argue no. I think what we've had is, we have to report all of that information anyway. So that was ongoing. I don't think that was specifically related, I'd say, for Vara, to other activities. Certainly, with our, regulator, they're constantly looking for information, building that relationship, governance, any change in governance structures, financials, people, new staff, new regulated individuals. It's a constant thing. That I think that's a really important factor here.
Dominic and Lennox, thank you so much for your time today. Well, that's a wrap on this week's show. Thank you so much for tuning in. Remember to like and subscribe to this video if you're watching us online, or stay tuned right here on this channel if you're watching us from home. It's easy to stay connected with Forkast for the latest developments in the world of Web3 and crypto. I'm Forkast Megha Chaddah. Join us again next week, this time as we bring you the latest from the world of Web3 and why it matters. Forkast IQ, get intelligent in Web3.